Hey Trade Pros, this is Victor from TRADEPRO Academy, and today we're going to be going over the easiest future strategy anyone can learn. So it's just a three-step process that we're going to talk to you about today, and you guys might have seen it already at TRADEPRO Academy. So let's go ahead, let's get started with this video. Sit back, relax, and enjoy as we go over the easiest futures trading strategy that we teach. So here it is, guys. As you may have seen, it is the pullback strategy. So we're going to be talking to you today about the pullback strategy as the easiest future strategy that anyone can learn in a trending market. That's how every futures trader should start. Not fading, not looking for the breakouts, but looking for that easy, low-hanging fruit, and that's that pullback strategy. So today we're going to be using three different criteria to explain the pullback strategy in the simplest way possible. So let's see what those criteria are before we go over to the screen and show you guys it live in action. So criteria number one is just price action. It's the simplest form, and we're going to go over it in just a minute after we list out the other two criteria. Price action, what we're looking for in the pullback strategy, is super simple in a trending market. So in a trending market, in a bull market, for example, all you're looking for is broken highs, retest those highs, and that's your pullback. To the other end, we're looking for broken lows, retest those lows, and that's your pullback in a bearish trend. Criteria number two is momentum. So is momentum consistent in that trend? So is it consistent in the direction of the trend? If we're ripping higher and equities are in a bull trend, is momentum to the upside? Now we're going to use a simple tool on Sierra charts to indicate momentum, and if it's changing or consistently moving to the upside or the downside to confirm our price action idea. Let's go ahead and look at the third and last criteria we're going to be using today. The third and last criteria is buyer or seller interest. So again, Sierra charts, and if you guys are familiar with level 2 trading, you will know that this is done through the DOM. So we're going to be looking at the DOM as our third criteria. We're going to be scoping out where the interest would be to the buy side or the sell side. Now let's dive in a little more into these three criteria before we go over to the screen and show you what it really looks like on Sierra charts, guys. Criteria number one that we talked about was price action. So in price action, the simplest thing to look for is broken highs and broken lows in the direction of that momentum, so in direction of the trend. It's very, very simple, and what you're looking for is a retest of those broken highs or broken lows after you've confirmed the last two criteria. But this is step number one. And are there rotations back in that pullback area, back in the pullback of the previous broken highs or broken lows? So it looks something like this, guys. So in a bull market here, guys, this is what we've got. We have price slowly grinding higher with rotations, and right here we've outlined the high to break. So once we break this high, pull back higher, the next level to look for the higher probability long in the pullback trade is a pullback back into this previous high right here. A few rotations right at that high, holding as new support that was previous resistance, and a press higher, ideally back into this high that was formed or even beyond. Now let's look at the bear scenario, which looks pretty much the exact opposite. So in a bear scenario right here, we have just price action moving, and we print a low right here. We have another low right here, which could be a short idea on the pullback. However, this low is more significant, it's more pronounced. And what we're looking for is price to break that low, retrace back into that previous low as resistance now, rotate a few times, and then try and catch a short for the continuation of the drop, ideally back into this low or to and through. Now, one little tip to know is in bear markets, markets move a lot faster, so there might not be as many pullbacks back into those previous lows. So what we look for in that case is a slight stall from a buy stop run, potentially a few rotations before we do catch the short. Maybe it might not pull back to the previous low. Now that we've kind of covered price action here, criteria number two here is momentum. So what do we look for in momentum? It's better explained on Sierra charts, but we'll give you a little indication here on this charting. And then at the end, we're going to be going over level 2 trading. So level 2 trading on the DOM. So when we talk about momentum here, we're talking about correlations in equity markets. That's what we like to use to gauge our momentum. So you'll see shortly in Sierra charts, we do have a little momentum graph, or a correlations graph, shall I say. And you can see how correlations move up or down. A steep slope higher indicates stronger bullish momentum, and a steep slope down indicates strong bearish momentum. However, at a steep slope up, if you start to see equity correlations start to curl, then you could maybe see a shift in momentum. What I wanted to outline first was NASDAQ in the correlations market could be seen as somewhat of a leader, and sometimes Russell leads the way. So what you're looking for in this momentum gauge is that all the correlations continue in one direction at the same time to confirm that momentum. And none of them really diverge. If it is a strong bull trend, you want to see all correlation markets moving higher at the same time without divergence of any sort. And that's to the opposite end in a bear market. So in a bear market, you would see momentum of all these equity markets slope lower. So we're going to look at that in a short bit, but this is kind of generally what you're looking for in terms of those criteria. Now, finally, let's go over the level 2 trading, the DOM and inventory. So that's buyer and seller interest. Then we'll go over to Sierra charts and I'll show you exactly what I mean on the ES and even NASDAQ. So right here is just a little DOM drawing that I've done, and all we're looking at is the bids and offers side. So to see who has an edge here, the buyers or the sellers, we're looking at interest on either end. So what I mean by interest is large offers or large bids. What side has more offers and more bids, just generally speaking, on the ladder? So what you're looking for is a discrepancy, and larger offers and larger bids tend to gravitate price and magnetize price towards those areas. So that large interest, if it's sitting above or sitting below, will try and pull price back into that area. Now what helps is as it pulls price in one way or the other, you're looking for the other side of that. So let's say if it is in a bull market right now and there's a lot of interest on the offer side like we have illustrated here, the offer side clearly outweighs the bid side. The offer side has on average 100, 120, 300 sitting on the offer ladder, while down at the bids we have 50, 60, and 40. So there's way more interest to the upside here, and with the previous two criteria, if they do align and we're getting higher highs, higher lows, broken highs, retest those highs, and also momentum, all equity markets pulling higher, if we get these bids start to accumulate and press higher as these offers get clear to the upside, that is a lot more buyer interest, and the buyers outweigh the sellers and price would want to go up. So this magnetized interest gets clear to the upside while these bids here move up, trying to get filled aggressively to buy up and buy higher. So that's what I mean by seller and buyer interest. So who has control? Alternatively, in a bear market, you'd want to see a lot of bids sitting down here at the bottom and not that many offers. So the interest is to the downside. So let's go ahead and see our charts and combine everything and look at the easiest futures trading strategy you guys will learn. And that's the pullback strategy combined with 3 levels of criteria to make this a high probability strategy for you new traders to learn, or even seasoned traders to implement their strategy. So let's go ahead to our computer over there and let's get started, guys. Hello everyone, so we're at part 2 right here of our video, and we're just going to be showing you how we do it here just based on these charts. So we're just going to be looking at general price action, the correlations, and also we'll be talking a little more about the ladder. Since markets are closed, we're going to be doing the level 2 trading more so on the chart itself, and this is NASDAQ. We're going to look at S&P 2, and we're going to look at the ladder just a bit, just to give you guys a little example. If you guys want to see a full video on level 2, drop a comment down in the comment section. I will do a video on level 2 trading. So right here on NASDAQ, this is a perfect example. So right now, momentum here is to the upside, and we're looking for price action to hold and break these highs and retest these highs on rotations for the pullback trade, for that long trade, for that long opportunity. As correlations continue moving higher, this is momentum moving higher. Pink, NASDAQ, green, S&P, yellow, Dow, and orange, Russell. So right here is a pretty good example. This was a previous high around these 2 areas. Obviously, everything won't be to the tick, but the idea is these previous 2 highs get broken and the pullback happens around these 2 previous highs that are pretty close to each other, and you get a few rotations and the pull up higher. Now here we've consolidated and drawn a new previous high level, so somewhere between these 85s all the way up to the 88s. I do realize that's 3 points, but you guys got to give us a little wiggle room. Not everything is super systematic. Now as correlations continue moving higher, momentum's moving higher, and what we're looking for is a break of these 88s or so here for a draw higher and then a pullback back into that area with a few rotations. Now, where does level 2 trading come into play? So if you can see right here on my graph, we do have these little red and blue boxes. So the red boxes are large offers to the upside. And once you start seeing a lot more red boxes to the upside, that's kind of level 2 trading from the DOM, and a lot more offers are showing up as interest to the upside. So if we move along here a little, what we're looking for is this break right here. So we managed to break these 88s, and then we get the pullback back into the same level. So this area right here, these previous highs broken down, a few rotations here. You can see correlations are still moving higher, And you can see now level 2 trading coming into play, the sellers versus the buyers, who has more interest. Right here, the buyers have more interest to the upside as these offers are getting accumulated and eaten up. Right here, all these red boxes, all these offers, continuation of the move higher. Now what we're looking for is a broken high again around this area, comes in consolidation, rebound, and all these offers continue moving higher, and so on and so on. Now it pulls back into this previous high, overnight high, and continues again slightly before the sellers come in here and the downside kind of gets absorbed. You can see some bids, but now you can see more offers to the upside. So as long as you see this level 2 interest to the upside, the offer interest to the upside, you can tell that the buyer absorption is going to take place and the sellers are going to get eaten up right here. So all you're looking for is the momentum shift, the price action here. Momentum continues to the upside while price action breaks new highs, retests those new highs, rotates, and pulls higher. Now, if you're looking at it on the DOM, this is a DOM from a closed session, but what you're looking for ideally is more offers to the upside. You can see right here 45, 13, 17 compared to single digits. Huge slippage here because we are closed, so it's not moving, but just based off this, there's way more interest to the upside and price is moving towards that area versus the downside. Now, if we look at an S&P chart, it's a little more apparent. So let's go ahead and look at an S&P chart example. So right here on the S&P, we've established that this is the high right here at this overnight high, and price is breaking through right now. You can see the level 2 trading right here, all these offers accumulating to the upside and printing higher, magnetizing, pulling price back up, and you can see higher highs, higher lows. Right here, the bids are moving higher highs, higher lows in a step matter fashion, accumulating all these offers to the upside. So sellers versus buyers, where's the interest? Price is gravitating towards that upside interest and momentum is still to the upside. So what we're looking for is a break of this area right here and a retest. So that's exactly what happens. We break it, retest, not to the T, and all these offers, all this level 2 trading comes into play, and all these offers get absorbed to the upside. It's exactly what we're looking for, and to this upside, you can see the bids are moving stepladder fashion while the offers are getting absorbed and correlations are moving higher. So this was a quick little glimpse of how we look at the simplest trading strategy, simplest futures trading strategy that anyone can learn, and it's the pullback strategy. All we're looking for is continuation of momentum, upside or downside, broken highs for the bull side, broken lows for the bear side, and retest of those levels with rotations and the DOM. So we're looking at where is the interest. Is the interest to the offer side or the bid side? If the interest is to the offer side, momentum's moving up, higher highs are broken, retest of those highs, and a continuation higher towards that offer interest at the top, we can qualify a long trade. Opposite to that, if we break lows, retest those lows on rotations, correlations are all dropping down in equity markets, momentum's to the downside, and a lot of bid attractions to the downside. So that means more bids on average, so like larger bids on the S&P, let's say 300, 400, 500 to the downside versus 100 to the upside, price is going to tract lower. So you can see right here by the darker red colors, there's more attraction to the upside versus these lighter, lesser blue colors of the bids. This is just the DOM overlaid on the chart, guys. So this is Victoria from TRADEPRO Academy. I hope you guys enjoyed this video on the easiest, simplest trading strategy, futures trading strategy anyone can learn, and it's the pullback strategy. Comment down below if you want to see more on level 2 trading, and we'll go through that for you guys. Click that little bell to notify you when we do go live in our live trading room, extended hours in the elite room now, and we'll get back to you with our next video. So see you guys, like, comment, subscribe. Bye bye.